All right, let's start. So a very warm welcome to this seventh edition, actually, of our webinar series by Phenology. We launched this one last year on a variety of topics covering essentially the business lines and the adjacent topics that are related to it. And I think today's session is particularly significant because it's covering one of the key evolutions that happened over the last 15 years, or a little bit more than 15 years even, in the financial industry and in payments in particular. So we're going to cover the PSD3 and the PSR evolution today. Our presentations are based on the final compromise text that was circulated last week, so which is dated from the 17th of April. And we assume there's a very high probability that this is going to be the final text that the European Parliament is going to vote in the coming months. Just a very, very brief introduction about Phenology. I'm not going to go into all the details, but for those that don't know us, so Phenology is a company established back in 2017 with a Luxembourg support PFS license. We operate 3 product lines. So our BKO product, financial flow management platform for the fund industry that focuses on centralizing all cash and bank data and connectivity. Then we got KYC Manager, where our clients' KYC teams run processes and customer interaction. And finally, our reg pillar, where the PSD2, formerly 3 in the future, is covered also. And we also serve clients with daily account holders reporting to the regulator. There we serve more than 40 entities together with the PSD2 and the PSR parts. The agenda today, we will start with a quick poll where I will ask you some questions to, let's say, to set the scene and also to see where we stand as a community. And then we will have 3 contributions. The first one by Nadia Manzari from Manzari Legal, which we consider being the authority on this topic, on the PSD topic in Luxembourg and potentially beyond. She participated at the time in the original PSD negotiations during the time when she was at CSSF. And she added also the supervision of the payment and the money institutions at the CSSF. And then she became a lawyer and founded Manzari Legal back in 2024. She's going to focus today on the historical background and the structure of the PSD, if we call it series, PSD 1, 2, and 3, as well as on the fraud dimension. And then we will have a contribution by our very own Elisa Prado from Phenology, from the product team, who closely followed the legislative process from for the PSD3 and the PSR texts over the last year. And she will have the opportunity to share she had the opportunity to share these updates also already with a variety of audiences at the ABBL, at the payments cluster, and she's going to cover the key changes and what in-scope entities, in scope of the PSD3 and the PSR, will have to do. And finally, and last but not least, my co-founder, Jonathan Prince, who will tell you a little bit more about the current PSD2 value proposition that Phenology is providing its clients with, and as well as also tell you a thing or two about the transition to the PSD3 and the PSR. Let me tell you that you're free to ask your questions in the chat. So at the top of the Teams client on your desktop or on your mobile, you can see the chat button. Don't hesitate to ask your questions, and we are going to cover them at the end of this session, all together, so not in real time. Now let's move on to the poll questions. So feel free to answer them. They're going to pop up on your screen. So our first question, where we would like to know how confident you actually feel about your PSR knowledge today. So don't hesitate to tell us whether you're very confident, whether you're reasonably confident, if you're aware of what's coming, or if you're mostly here to learn. Let me just give you a few seconds to click one of these buttons. All right, so we can see already those results, the preliminary results. It's pretty much what I expected, to be honest, in that sense. So reasonably confident on the basics is the answer that most of you gave, but also the other segments are very well covered. So yeah, thank you for sharing there. So let us move on to the next one then, which is a question about how prepared you feel that your organization is for the PSR. And there you will have the option between that you have already a project running and a clear plan, that you started gap assessing, that you're aware about the changes, but you haven't started quite yet, which is at this stage, I suppose, okay, and that you still understanding what applies to you. Let me give you again a few seconds there. Answers again dispatched across the different pillars. So the gap assessment definitely seems to be the status that most of you are in. Fine, thank you for sharing. And then a last one, quickly. It's about asking you what your biggest concern about the PSR is. So with the options that it might be challenging to meet the technical and operational requirements in time. Second option, the cost of the build could be a concern. Third option, the uncertainty about the final RTS, which we, of course, obviously don't know yet about this content, about their content, and also about keeping pace with fraud and liability changes. So please make your choice. Oh, yes, interesting. So currently the concern around the RTS was in the lead. Now it becomes a little bit more balanced between the different answers. All right, so the RTS seems to be the biggest concern among this audience. Okay, thank you for sharing. So we know a little bit what your concerns are and your expectations are. And without further ado, let's move on now to Nadia Manzari, who's going to present her contribution to today's conference.
Thank you all for the kind introduction, and also thank you to Phenology to giving us the opportunity to present here today. So PSD 1, 2, and 3, that's what you said I will present today. So the history of this framework, the history of these directives. I must honestly say, when I started negotiating that in Brussels almost 25 years ago, in 2001, I've never had imagined, could imagine that we would have 3 texts on this, because specifically because at that time at the CSSF, the comments on this directive was that it will not have any impact on the banking services back at that time. That was the general opinion. So between any impact and the impact this directive has had, I think there's a whole history in between. It is definitely the directive for digitized payment services within the EU, for single EU market, and has now already been revised twice. So which means that it is also the evolution of payments is quite considerable within the EU. That's what those revisions show. Yeah, so it has, as Rolf said, the text has been, the final draft compromise has been published on the 17th of April. In the both texts, we have two texts. I'm going to explain the reasons of those two texts in this new framework later on. We have an implementation period between 21 and 27 months from the date of publication of both texts. So, we are expecting this publication to happen in the next few months. So yeah, PSD1, PSD2, PSD3. So PSD1, as I already mentioned, was the directive who has laid the foundation for the single payment market or payments. So yeah, single payment service market within the EU. It was back at that time already meant to be the full harmonization directive, so meaning that the regulators at that time, Commission and Parliament at that time, were considering it as an important topic where we should have a full harmonization within all the member states. So it was the full harmonization directive in the financial sector at that time. And it was also the first directive in the financial sector back at that time implementing consumer protection rule in financial services. So from that side, back at that time already, it impacted the whole banking sector because they had to undergo considerable work from their T&C's point aside with their customers, so their terms and conditions with their customers, which at that back, but with the implementation of the directive in Luxembourg had to align the whole framework and the whole general conditions with their customer. That was only the first very minor consequence. The consequence of this PSD1 also was that it was bringing into the financial sector actors, non-financial actors, who were for several years intermediating the payments, also due to the e-commerce coming up beginning of the 2001, 2000. So this was really the aim of PSD1, regulating the payment services, bringing them back under a common framework within the financial industry and applying the same, making everybody apply, or all the payment actors applying the same rule. So this was really also the directive who included or created the payment institutions. And the directive has been implemented by the law of 10 November 2009 in Luxembourg. And it was for Luxembourg, I would say, pretty good, a success, I would say, because it has also launched the payment ecosystem in Luxembourg. Some big players have established in Luxembourg due to the implementation of that directive, and also back at that time due to the rapid implementation, because Luxembourg was the first country implementing the directive PSD1. Few years later, 8 years later, we have then the PSD has been reviewed 5 years after the application, and then in 2015 there has been a revised PSD2 has been published. Because why did we need a revised PSD2 back at that time? As I already mentioned, so the digitized payment market, the digitized payment industry has considerably evolved and very rapidly evolved in those 8 years. We also have the industry. We have seen new payment actors coming up, the third-party payment services providers. New payment services also have developed within these 8 years. More digitized services, new payment instruments have entered the market, and also we have then also. There was a necessity also to align the EMI regime, and due to this increasing, or due to this rapid evolution of digitized payments, digitized payment services and payment instruments, we have, of course, also have seen an increasing fraud coming up rapidly, and that was the objective of PSD2, addressing or increasing the consumer protection with regard to fraud, so introducing the strong customer authentication requirements. And that it was really also the kickoff for the open banking within the EU, allowing access to payment service or to payment account information to third parties. So the banks were obliged by this directive to open up their accounts and to give access to TPPs. Payment Services Directive 3 and PSR. So again, there has been a review. A review has been done several years after the implementation or application of the directive, and here again, the results of these reviews have shown that we have still a lot of inconsistencies in the application of the directive within the EU, some incomprehension with regard to certain payment services which are provided or the way we need to provide them. An increasing the level of fraud has considerably increased again with new technologies coming up, digitized payment services and payment solutions coming up. Of course, the fraud has increased. And here then also again the decision was to create a new framework, or to amend the framework in order to put in place a new framework, which I think we can move to the next slide. In order to redress the shortcomings of PSD2. So as I said, consumers who were losing trusts because of the fraud risks increased. And so the decision was taken that consumer protections should be further strengthened, that due to regulatory arbitrage also, because the member states did not apply the rules in the same manner to the actors, there is also a need to improve the effectiveness and the competitiveness of the open banking, and also of the application of all the rules. That there should be better supervision and a more consistent supervision across the member states, and again here to improve the access also for third-party providers, and also for non-bank PSP to payment systems and to bank accounts. So what the decision was here now again, we can again move to the next slide, to not ask for PSD1 to PSD2 to have all these changes, or to do all these changes within the directive. The decision now for this new framework has been taken to put in place to implement two frameworks, one directive and a regulation in order to make sure that we have a harmonized application, which was already the objective of PSD1, which apparently did not happen. And the directive. So the directive will include all the institutional and supervisory aspects of payment services here. You will find in the directive the authorization and licensing of PSPs, the supervision and enforcement by national authorities, the rules on access to payment systems and to payment accounts, the governance, risk management, and all the safeguarding of funds aspects will really be in the directive. So that was too fast. So the directive really is regulating who can operate and under what supervisory framework people can operate, payment services provider can operate. And the regulation who is really containing all operational and conduct rules for payment services, which we are also talking about today, for prevention, strong customer authentication, data sharing, transparency, and information to users' rights and obligations. So here it's really, the regulation is really addressing how payment services must be provided in practice. What are the major changes? I think I make a distinction between the major changes and the fundamental changes. Major changes on one side, still the same tentative to revise some aspects of the directive, which we tried already to revise with the PSD2, but definitely it did not happen, or the objective was not reached. So here again, there's a review of the definitions and some clarifications on the definitions and the exemption rules in the directive, in the text. So we have revised, reviewed definition of ATM providers and the registration requirements which applies to them. This is due to some issues with ATM providers within the EU and some money laundering aspects. So there was a request during the negotiations in Brussels to oblige them to be full payment services provider, but this did not happen, but they have stricter rule and a little bit, yeah, with registration requirements. An important amendment, maybe, or modification might be the clarification on the definition of payment account, where here again it is clarified what a payment account should be. So it should always allow third-party pay-ins and third-party payouts and direct pay-ins and direct payouts. Another clarification is the definition of virtual IBAN. So we had longer discussions over the last years. Is a virtual IBAN an IBAN or not? And this is now clarified. The directive clarifies that a virtual IBAN is to be considered and treated like as a normal IBAN. There are also improvements for the access to payment systems and bank accounts for non-PSPs. But the fundamental change, I would say, with this directive is again on the consumer protection side. So that this directive is introducing new paradigm in fraud prevention. What do I mean with that? So that we are already moving over to the next presentation. So I would say the burden of proof still remains on the PSP side, but the burden of proof has really been not reinforced, but it's really, there are stronger requirements on the burden of proof side. So until under PSD2, if a user claimed that he has been frauded on an operation or on a transaction, and as long as the PSP could prove the SCA has been applied and that this transaction has been duly authorized, that was more or less, I think, the best proof for the PSP, saying, okay, there has not been any fraud, and the transaction has been already operated. I am not liable, and that was more or less very often it. So this has really been fundamentally changed here. So saying SCA has been applied and also the transaction has been authorized is not sufficient anymore. The PSP has to provide really concrete supporting evidence that the user has acted fraudulently or with gross negligence. Here again, also the directive, or the framework, not the directive, the framework introduces new customer involvement. So the PSP must invite the user to explain all the circumstances. And a user response, non-response of the user cannot be assumed cannot be used to assume authorization of fraud. So, and I would say, really, we have higher requirements on the PSP side to evidence that the liability is not on his side. What does that mean in general? So we have the texts have introduced several changes. One essential one is the transaction monitoring, which now is really used as a liability trigger. So whereas under PSD2 transaction monitoring mechanisms were mainly part of the strong customer authentication framework and were mainly used to justify exemption from SCA, now under the PSR we see a clear shift in approach. First, we see that the transaction monitoring obligations are reinforced and really apply to both the payer's PSP and the payee's PSP, and that those obligations are also linked directly to the liability framework within the payment services. The regulation provides that in case of an unauthorized payment transaction, the payer shall not bear the financial consequences, except in case of fraud and, of course, negligence, and that SCA is really not sufficient to prove that SCA has happened, is not sufficient to exclude any liability. it also, as I said, it requires also that this transaction monitoring has to be carried out on both sides and at different stages of the transaction. So the payer's PSP must act before the execution, while the payee's PSP must act before making the funds available to the users. And it is clearly mentioned that where PSP fails to carry out such monitoring, and if in that case the payer suffers financial damage, then of course it is clearly stated in the text that the PSP shall bear the full liability. Here again, it is worth to mention that in this new framework of liability, fraud and liability, the PSP is always the person who has to refund the users in case of fraud, even though there could be other actors in the payment chain being liable for fraudulent or for a non-authorized transaction. But then it is on the PSP's. It is the PSP's role to act against those actors. It's not on the user's role. It's not the user's role to do this. To act against the other actors. So yeah, on transaction monitoring, just in order to conclude, I don't know, I did not look at the time, so if someone can make me a sign, how many time I've left. 2 minutes. Okay, that's gonna be very short. So, and then we have the payee side, the payee side fund interception. So a second major change in the roles of the payee's PSP is that normally they were very passive on once the funds were received. That's not longer the case anymore. Here also, the PSR introduces a structured mechanism allowing, and in certain circumstances also requiring the payee's PSPs to intervene before funds are made available. So really, what we see here in the new regulation is really liability shift on both payees and payers PSPs having first more obligations in transaction monitoring, in fraud, and in transaction analysis. And what is really also, I would say, a fundamental change here is that we have the spoofing refund right, which has been introduced in this regulation. So that means that in case of impersonalization of the consumer's own PSP via the PSP attribute channels, for example, then of course there is no, and that's this type of frauds which we have been seen coming up very regularly over the last years. Now we have a specific framework in place for the users to be indemnified or refunded in case of spoofing or impersonalization fraud. A specific framework has been put in place where normally the PSP has to refund the users under the condition that he has a police report. And if he can show, or if he suspects fraud or negligence, there's 15 days delay, business day threshold in it where he can use these 15 days to do some research or to prove that there is fraud or negligence or gross negligence from the user's side. But on the other, if this does not happen, then of course the payment service users are refunded immediately. So 1 more minute, and then I'm going to conclude and hand over to Elisa, who is going to do the technical, going deep dive into the technical aspects of this changes. So what is also important to mention here that the framework will introduce a mandatory fraud data sharing between payment service users. It's something similar which we already have seen in DORA happening. So the PSPs have to exchange important information to identify fraud rules of fraud models in the sector, in the payment services space. And what we also can mention, which is also an important trade, I would say there is also cross-sectoral cooperation, which is introduced between the telecoms and the big platforms where they all have a certain liability and obligations with regard to fraud prevention, in order to avoid that consumers are victim of fraud and scams. So what is the impact? So the impact, I think it's going to be presented by Elisa. But I would say you banks and payment services provider need to upgrade the transaction. We need to upgrade the entire transaction monitoring systems. They need to improve and also upgrade or implement a customer facing fraud controls, and also an important point also is that the framework requires also that there's human support available at the PSP sites for the customers, in order to provide them the possibility to report directly and discuss with a human being and not a chatbot, in case of fraud, or in case of any claims they could have about the transaction. Voilà, en général. So I'm going to hand over. Thank you. Sorry for the
Thank you very much, Nadia.
minutes.
Thank you very much. Thank you very much for these insights. Very helpful indeed. And without further ado, again, Elisa, your turn.
It would be good if I could unmute myself. So hi everyone, for those who don't know me yet, I am Elisa Prado. I work on product and regulatory evolution here at Finology. And over the next few minutes, I'll walk you through what the PSR changes operationally, focusing on open banking, and where the new build actually sits and what to prioritize between now and the date of application. So let's start with where open banking fits in the wider package. This is just a one-slide map to keep us oriented. Nadia has just walked us through quite extensively between the three of these four pillars here. So I'm going to focus on the first one on this slide today, open banking. So new rules on performance and functional parity for the dedicated API, a customer-facing consent dashboard, a list of prohibited obstacles, and changes to strong customer authentication. So let's start with the basics. So I think most of you are already aware, but open banking has three main actors. I want to set them out clearly because we'll be referring to them throughout. We have the bank, which holds the customer's account. The third-party provider, which is either a payment initiation service helping the customer make a payment, or an account information service letting the customer see their accounts in one place, and the customer, of course, who instructs the third party on their behalf. So under PSD2, there was already a set of obligations, which Nadia has explained. And under PSR, we have some upcoming changes. So the architecture stays in place, but the obligations sitting on top of it get a bit tighter. For instance, the fallback mechanism is removed. This is one of the most important points when it comes to open banking. The functional scope of what the API must support is expanded and now codified into the regulation itself. There is, as I mentioned, the new customer-facing consent dashboard inside the bank's online banking platform, and the authentication framework changes in ways that affect both the customers and the third parties. So I'll go through each of these in turn. So again, as I just mentioned, the first big change is that the fallback mechanism is gone. So under the PSR, the dedicated API is the only way for third parties to access payment accounts. There is no fallback to the customer interface anymore. So what this means in practice is that the dedicated interface has to be available by itself all of the time. Well, the performance and availability parity rule itself is not exactly new. The regulatory technical standards, the RTS under PSD2, already require that the dedicated interface offers at least the same level of availability and performance as the bank's channels offer customers directly. And banks already have to publish statistics on this. What changes under the PSR is that this moves from, again, regulatory technical standards into the regulation itself, and there will be new technical standards published by the EPA on the EBA, on the format of those quarterly statistics, optimal recovery times for unplanned unavailability of the dedicated interface. So you should expect to update the format of what you published nowadays. And if your current API's performance is below that of your customer interface, then you should expect more visible scrutiny, if I can use that word. The functional and data parity rule is a bigger shift. We'll spend the next slide on it. The short version of this is what your customers can do in your online banking platform. Third parties must also be able to do through the dedicated interface, the API. The last point on this slide is that under PSR now, new banks and payment institutions have an express deadline of 3 months from the moment of authorization to put a dedicated interface in place. That clock is new in primary law. So the functional parity, this is one of the most operationally significant changes in the PSR. It's also one of the easiest to underestimate. Under PSD2, the RTS has already stated that the dedicated interfaces should not create obstacles to third-party services. And the EBA, through opinions published in 2018 and also 2020, interpreted this no obstacles rule to mean that a third party has the right to initiate the same types of payments that the bank offers to their customers through their own interfaces. So under the PSR, this is no longer just an interpretation built on top of this no obstacles clause. It's written directly into the regulation as a minimum functional set. So you can see the list of payment types here. This is what the regulation expects as a minimum set of payment functionalities that must be offered through the dedicated interface. We also have data parity requirements. We have a new requirement as well that the PISP is now able to choose which of the available SCA methods is to be exposed to the customer. And in the conscious of time, moving to the last point, the user journey. This is, again, a very important point. So the user journey is quote unquote straightforward and seamless. This is the standard that must be followed. So, all authentication methods must be supported. No additional steps beyond the steps in the bank's own channel must exist in the TPP channels. These are all things to be taken into consideration and evaluated in your gap assessment. So taking all of the contents of the slide into consideration, it's possible or even probable that a lot of the banks' PSD2 interfaces were built to a narrower specification than what the PSR now requires. So a gap assessment before assuming your existing API is fit for purpose is essential. The second big change is the consent dashboard. So for some institutions, this will be a new build. Others may already have something close to this in place. The basic obligation is that banks must provide a dashboard inside their online banking environment where customers can see and manage their open banking permissions. And when permissions change, the banks must inform the relevant third parties promptly. So what the dashboard has to do is quite specific. It's quite detailed in the PSR text. What needs to be displayed is detailed there. This two-way communication between the bank and the TPP. So from the bank to the TPP when the user is withdrawing, for instance, a consent through the consent dashboard, and from the TPP to the bank when the user is granting permission to a TPP. So these notifications have to flow both ways. So, and again, they must be made without undue delay. So this is also very important. This means, of course, that the systems must have proper exception management, automatic retries in order to be reliable in production. So if you don't already have a consent dashboard, this needs to be on your PSR roadmap as a project or a sub-project of its own. So this slide lists the practices that are now expressly prohibited in the regulation. I will not go through each of them in detail, but what is important to understand here is that most of these might already be familiar for those of you who worked on PSD2 implementation projects. Some of them are coming from the PSD2 RTS, but most of them are actually coming from the EBA opinion from 2020 on obstacles, which had already identified several of these as breaches of the no obstacles principle of PSD2. So what the PSR does now is move this list from interpretive soft law into the primary regulation. So we try to group them here just to give an idea of what these obstacles are and what they mean. The first group being about customer credentials and permissions. So for instance, it is considered a prohibited obstacle to make the customers retype their account number on the bank pages if they have already done so on the TPP channel. The second grouping is about registration and payment scope. So these cannot be restricted to the TPP when compared to what the bank offers in their own customer interface. It's also prohibited to require these third parties or TPPs to register contact details with the bank, the exception being that if these contact details are needed for the two-way communication that I mentioned before in the context of the consent dashboard, then this is the only scenario where this is permitted, otherwise it's not. And the third group, and perhaps the most important one, is around authentication friction. So this is where I would particularly like to draw your attention to. So banks cannot require more authentications than their own channel requires. They cannot build APIs that omits some of the authentication methods that are available in the bank's own customer channel. They can't require two or multiple SCAs or strong authentications in a single payment initiation flow. So the key message of this slide, in my view, is the customer journey through a third party should neither be longer, more cumbersome than the customer journey that exists directly with a bank when the customer is accessing directly the bank's channel. So that's the test that needs to be made in your evaluations and in your gap assessment. Speaking of strong customer authentication, so just a recap of, or a quick refresher, because the changes only really make sense against the existing framework. So there are three categories of strong customer authentication, and this is needed to verify a customer when they are trying to access their payment account online or initiate an electronic payment. So the categories are knowledge, something only the customer knows, and there are some examples here like PIN, password, or secret answer. Possession, something only the customer has, such as a token or a mobile phone. And inherence, which is something only the customer is. So this could mean a fingerprint, a facial scan, a biometric verification here. So there are two rules. There must be at least two elements nowadays from two different categories, and they must be independent, meaning that if one element is breached, it means that the other or others are not compromised. So this is the current situation under PSD2. Under PSD3, one of the most important changes is that it's going to be allowed now to use two elements from the inheritance category. So this would permit, for instance, to use fingerprint and facial recognition, meaning that a password will not be required anymore. There is one caveat, however, which is the second point here at the top, is that if banks decide to use two elements from this inheritance category, they must prove to their NCA that they are indeed completely independent. This requirement does not apply if elements from different categories are used, like it is a requirement today. But again, if two elements from the inheritance category are used, then this needs to be proven. I would also like to point out here just the accessibility requirements, which now the customer must be provided with an option that does not require him or her having a mobile phone to be able to go through the SCA process, unless there is an agreement that the services will be provided in a mobile-only way. And this also applies to the TPP channel. Now, when it comes to timeline and priorities, as was already mentioned, we already have the final compromise texts published. The entry into force, which I'm calling the D day here, is expected somewhere still in Q2 or Q3 of this year. The most important points here on the left, on D plus 12 months, which, if the entry into force is Q2 2026, this would be Q2 2027. This is where a lot of important technical publications are expected to be published about SCA, the open banking interfaces, transaction monitoring, and so on. So this would be most probably the busiest milestone for technical standards. And on D plus 21, which brings us to beginning to mid-2028, this would be when the majority of the provisions under PSR would apply, with the exception of the verification of payee provisions, which would be applied on D plus 27. So this would be basically what is already done under the instant payments regulation, but now bringing the non-euro credit transfers as well into the scope. Here are some areas that we highlighted that you could think about prioritizing now. They are not in any specific order, and this is not only about open banking. As Nadia was explaining, for instance, the fraud aspect of the regulation is probably the heaviest one and something that should be prioritized by banks in their review of their internal processes, their refund processes. There should be a gap analysis done on the API, if there is parity indeed or not, if all of the functionalities available in the customer interface are already available in the API, the consent dashboard, and so on. So this is just an overview of areas that should be prioritized already starting now. So we do not need the actual entry into force, so you do not need the actual entry into force to go through this. Now I am going to conclude. So that concluded the operational view of the open banking pillar of the PSR. I'll hand this over to Jonathan now, who will talk a bit about how Finology supports the transition.
Thank you very much, Elisa. And as I'm maybe the appetizer, the amuse-bouche just before your lunch, I'll keep it quick. So now that we've, if you could go back to the previous slide, please, Elisa, now that we've covered the regulatory changes brought by PSD3 and the PSR, I believe the key question is really, how do you implement this in practice? So our approach is very straightforward. We don't see PSR as a complete rebuild, but rather as an evolution of what has already been implemented under PSD2. Our platform was designed as from day one to support open banking and the regulatory compliance. So a large part of the required infrastructure is already in place. So I'll walk you through how this translates concretely into PSR readiness. So if you can, indeed, thank you. So to give you a bit of context on Finology, today we operate across more than 35 banks and PSPs in 9 European countries, with our infrastructure live since 2019, when PSD2 came into force. And as introduced earlier on by Raoul, we are regulated to support PSF under the supervision of the CSSF here in Luxembourg, which is, I believe, a key element in terms of operating critical infrastructures for banks. So from a security and resilience standpoint, we are also ISO 27001 certified and aligned with DORA requirements. And all the infrastructure is hosting in Luxembourg in Tier 1 data centers. So this is important point where it's not a theoretical platform. It's already running in production in managed services and in a regulated environment and at scale, obviously. So if you could go to the following slide, please. So if I try to simplify the architecture, there are really 3 main layers. First, the connectivity layer. This is where we connect banks, ASPSP, so account servicing payment service providers, with third-party providers, the TPPs. Second, the regulatory layer. This includes the API gateway, consent lifecycle management, and full support for AISPs and PISP use cases. And third, the security and authentication layer, where we orchestrate strong customer authentication and integrate with the bank's existing SCA system. The key message here again is that we cover the full open banking chain from the bank to the third party to the end user, the payment service user, with compliance embedded by design. And very often we hear from our clients what is actually a PSU. It's not only individuals, it could also be a corporate. So that's very important based on the type of clients you're serving. And this is basically exactly what the PSR is now reinforcing with stricter and more explicit requirements. So if you could go to the next slide, please. This is, I believe, the key message of this section. There's a common perception that PSR means starting from scratch. And in reality, it's more accurate to see it as a stress test of your existing PSD2 setup. If your implementation was minimal, PSR will feel like a big step. If your foundation is solid, on the other hand, it's more an evolution. Because today, most of the core components are already there. API gateway, consent management, SCA integration, TPP connectivity. So on our side, all of this is already in place and running in production. So what changes with PSR? I would highlight 3 main areas. First, the functional expansion. We move beyond basic use cases to more payment types, richer data, and continuous payment status updates. Second, control and transparency with the dashboard and real-time notifications. User gains much more visibility and control over the data and permissions. And third, the user experience, which is probably the biggest shift. The regulation now clearly prohibits friction. So it was already something that was covered in PSD2, but here you have extra steps. So no extra steps are expected, no degraded journeys, no limitations compared to the bank's own channel. So the third-party experience must become as smooth as the native banking experience. This leads to an important point. The main effort is not on the connectivity layer. It's on the bank side, really. Banks need to build a consent dashboard where we can actually help with a white labeled interface in this case. But they also have to expose internal APIs, provide real-time data, and review the user journeys end to end. So key takeaway here is that PSR compliance is not just a technology upgrade. It's really a broader transformation of internal systems, processes, and user journeys. So we saw that with PSD2 that it requires to align various expertise within the banks, the business, compliance, and tech. I believe it's going to be exactly the same there. So if you could switch to the next slide, please. So the here, what does this mean in practice? For existing Finology clients, we already have a clear roadmap, and we will guide you through the different steps of the transition. For institutions that are not yet equipped, the first step is typically a gap assessment to understand where you stand compared to PSR requirements and to prioritize the areas that need to be addressed. Our role here is really to act as a partner, so not just providing the technology layer, but helping structure and accelerate the overall compliance journey. So I'm happy to welcome you on board of Finology's partnerships. I believe we can already switch to the questions. So there are 3 questions, and we'll keep it in 5 minutes if we can use these extra 5 minutes. So Elias was asking, would the functionality data parity obligation requires ASPSPs to make available over APIs functionalities that may be inherent to the e-banking platforms and or application only to specific customer segments, multi-level payment approvals flows that are applicable only to corporate customers. Elisa, maybe you want to answer that one?
Yes, I can take that, and thank you for your question. So the objective of the regulation is not really to have all of the functionalities that are available in the e-banking platform in the dedicated interface. It's really about whatever types of payments that you offer in the interface and whatever data you display to your customer must also be available to the TPPs. So when you're talking about approval workflows, I would see this as sitting outside the scope of PSR. This would be something that would be done previously to the initiation of the payment. Nadia, if you also have an opinion here on this, but I would not see this as being part of the functional parity requirements. But really the functional parity requirements is if you have different types of payments that the customer can initiate through the bank's own customer channel, then this must be also be made available to TPPs through the dedicated interface. But I think approval workflows and any other e-banking functionalities that are not directly related to this are outside of the scope of, or even the spirit of the regulation. I hope that answered the question.
So Nadia approves. The other question was from Marino in functional parity regarding payment type. Did not see instant payment, are they excluded?
I can also take this one. So the types of payments that are listed there are a minimum set that the bank must provide to the TPPs. So they are not a closed list. And actually, instant payments, if I'm not mistaken, was even explicitly mentioned in the EBA opinion from 2020 and also 2018. So if you do offer instant payments, this is a payment type. So it means that they must also be offered through the dedicated interface. So again, the list that is in the regulation and that we showed here, it's not an exhaustive list at all. It's just the minimum functionality that must be offered through the dedicated interface. So yes, if you do have instant payments available in the customer channel, they must also be made available to the TPPs.
Indeed. We have a question from Nadej, which actually we'll take offline, Nadej, if you want, because I think it requires to explore a bit more what our payments means, and we know pretty well your setup at Swiss Life, so happy to take that offline, and I don't think it's indeed the platform to address this one specifically, if that's okay with you. So if we don't have any further questions, I will then thank everyone, especially the speakers. Nadia, thank you very much. Elisa, well done for the hard work and putting all that together. And Raoul, thanks for hosting it perfectly. And
Thanks, Jonathan.
thank you everyone for attending. Raoul, I'll let you conclude.
Yeah. Thank you very much also from my side. There will be more webinars in the future, and certainly there will also be an additional one on PSD3 PSR end of the year, beginning of next year, and at the latest when the RTS texts are going to be live. So stay tuned and have a nice day.
Thank you.
Thank you.